Hello there, welcome to the Week Ahead show. We're looking ahead to a truly historic week when the British public will decide if they want to remain in the EU or leave on June the 23rd. Now, this is certainly the biggest event of the week, of our lifetimes even. It cannot be underestimated. Now, before we discuss a potential Brexit, let's run through all of the other economic data releases, and we start with the UK data on housing first of all. We've also got Japan data as well. We know that they're not going to be adding any stimulus. A lot of that is to do with Brexit as well, those fears, and really people entering into the end, the safe haven on the back of that. But look, Jeremy Corbyn, he is in the limelight on Sky News. On Tuesday, we start in Australia with those RBA meeting minutes, Japan as well, more data from there, the UK public sector borrowing data, and the ZEW economic sentiment from Germany, which we are going to analyse in a moment. And Boris Johnson and Sadiq Khan go head-to-head on the BBC for the referendum debate. On Wednesday, again, we start in Australia there. We've got China data to come too, Canada as well, Eurozone consumer confidence, US stats from the Chicago Fed National Activity Index, UK consumer confidence, and some oil data. On Thursday, it's all about PMI stats there. We've also got something very important indeed. Yes, the EU referendum. Of course, we're going to talk about that in just a second. On Friday, it's France GDP, UK mortgage approvals, German business climate, US durable goods, and the US Michigan consumer sentiment, and of course the crucial results of that referendum. We will have live coverage all day long here on IG, so stay put for that. First of all, let's get away from the Brexit just for now. Let's welcome Chris Beauchamp. He's here with me. Hello to you. So it's going to be a momentous week. It's going to be huge. It's going to be historic. But first of all, let's talk about the other things, because it's sometimes easy to forget that other things are happening. US durable goods. It was a very positive number last time, wasn't it?
It was a very good number last time, and I think that's an interesting point given the sort of quandary the Fed finds itself in, because we know that US job numbers are a bit poor, and they decided to hold rates at the most recent meeting. No surprise there either, really. It's clearly been a very difficult period for the Fed. So if you get another strong number in US durable goods, it's going to sort of highlight the fact that you've got a strong economy, but the jobs numbers aren't improving in the same way, which underlines how difficult it is to the Fed to sort of analyse what its next policy move may be. In terms of the market reaction, I think what we have seen over the last few days has been a big move in the US dollar index. And this is the longer term chart here for the US dollar against a basket of currencies. And we've been stuck, and we still are stuck, if you like, in this descending channel you can see on the chart there. Essentially the price bouncing between two descending trend lines. If we zoom in, you can see it more clearly. The last few days, really, we had a decent rally in the dollar index, and then the Fed meeting came and it said they weren't going to raise rates, and since then it's weakened again. So if we're looking at that, another weaker durable goods number would really start to push this dollar index lower. Now, the impact of that would be that you get currencies like the euro, the pound starting to move higher, at least against the US dollar, and also equities might get a bit more of a breathing space. And we can see the last day or so they've bounced quite impressively. So if you still get weakness in the US dollar, that's what we'd be looking for in the market reaction, I suppose. It has been an interesting few months for the US dollar, but the fact that they really are struggling to raise rates in the US means that the rally that we saw in 2014 and 2015 has really started to come to an end.
All right, let's talk about the German ZEW stats, because the German economy had an impressive first half of the year.
Yeah, you get German ZEW and German EFO, so it's a sentiment week for Eurozone data. It's not particularly busy in terms of what we get from the Eurozone, understandably, really, given what else is going on. In terms of whether we see an improvement in the German economy, it's still doing very well versus other parts of the Eurozone, such as Spain, Italy, Greece, even France, but it's not perhaps as strong as we'd like it to be. However, with everything in the Eurozone at the moment, you have to take into account, of course, the ECB and its QE programme. The fact it's buying up not quite everything in sight, but nearly everything. And that's underlined the move into negative territory for those German 10-year bonds this week. In terms of the market reaction for the euro, again, it's about looking at the long-term trend. And what we've had since December is a steady rise in the value of the euro against the US dollar. Now, that's interesting in one sense, because it maybe suggests that things are better in the Eurozone than people might think, but it does make life more difficult for German exporters. So if you do get a weaker reading in the EFO and the ZEW, that will underline the fact that people are concerned that the rising euro is starting to hit the German economy. Nonetheless, if we go back to what we just said about the US dollar index, if that weakens, you can start to see a reason why this trend in the euro that we've had over the last few months starts to move higher once again. So back towards maybe 114, even to 116 over the longer term. I think it's very interesting that we've had that strong bounce in the euro.
OK, now a factor playing into all of these economic releases is, of course, the EU referendum. We have it on Thursday. It's finally upon us. My goodness me, what a week it's going to be, Chris.
It has been a week, and it will be a week as well. We've had polls coming through left, right and centre. In fact, I spoke to people yesterday trying to find a schedule for next week, and they said it's almost no point in trying to construct a schedule because it's so busy in terms of polling data coming through. And, of course, you've got those referendum debates as well with Boris Johnson, Jeremy Corbyn, Sadiq Khan. Jeremy Corbyn could be the most interesting because he's been so lukewarm on the EU. You only have to Google his name and see that he's not been a fan until he became Labour leader, and now he's been pressured to take the stand. And what we have had is that shift in the polls towards the Leave camp, including the one from the IG Survation poll yesterday. And really, as a result, you've seen David Cameron and George Osborne take a step back from campaigning and to allow Labour figures like Jeremy Corbyn to take over. Has it worked? Well, we don't know at the moment.
Not according to the polls.
Not according to the polls. And I think at the moment, people are very unnerved, and the market has been very unnerved that maybe they've been underpricing the risk of Brexit. The IG binary, in common with the betting markets, in common with what we've seen in previous events, though, still says the most likely event is that the UK votes to stay. If you look at the weight of money placed in the IG binary, that has been towards the Remain camp. So even now, we still expect them to stay. If you look at, again, what happened in the market, and for this you take the euro against the pound as perhaps the most obvious indication, the euro has been rallying non-stop in June until about 2 or 3 days ago against the pound. Very, very strong performance off the May lows. Again, it's that rising trend of the euro. You can see that there is still in effect. And maybe that's just started to pause. And perhaps you might think that maybe we might see a week in which the Remain camp starts to edge back in the polls. So I think it's still going to be a very neck and neck, and it's going to be a tighter vote, I think, than we thought it was going to be.
And of course the polls don't take into consideration the undecided voters as well. Let's move on and talk about the corporate stats that we're expecting next week. We're going to start with Majestic Wine. Shares have dropped recently. They're trying to modernise their business strategy as we speak, scrapping the firm's 6-bottle minimum purchase idea. Halliburton as well, obviously one of the world's largest providers of products and services to the energy industry. Obviously the glut is still an issue despite the fact that oil prices are gaining. On Tuesday, PhotoMe International, Whitbread as well. We are going to talk about that in just a second. As well as that, we've got Petrofac as well. The same thing can be said for Halliburton as well. They're in the same sector there. FedEx as well for your parcels. Adobe Systems, we use that here. And at Carnival as well. On Wednesday, there's, well, it's all about the retailers, as you can see. We've got Debenhams there, Barnes & Noble as well for your books, H&M, another fashion retailer, and for the homewares is Bed Bath & Beyond and Volkswagen to AGM. On Thursday, Tesco is a big stock that we're going to be watching. Still the UK's biggest supermarket. Go ahead as well. We've got BlackBerry too. And on Friday, finishing things off just there, we have Stanley Gibbons there. It's a stamp and collectibles dealer. Recently announced property deals, which hopefully will raise cash for the company because it's now in £17 million in debt. All right, Chris. Tesco is probably the biggest one that we're watching next week, would you say? It's still having to battle these Lidls, the low-budget supermarkets, isn't it?
It has been a difficult few years for Tesco, and of course with exquisite timing, their trading statement comes out on the 23rd when the UK goes to the polls, so at least we'll have something to talk about even as we're waiting for the results to come in later in the day. Tesco's had a tough time of it. There's an argument coming through that says actually a lot of the good news in Tesco is now in the price. They've had the easy work done. Asda's beginning to see an improvement in its business versus the likes of Tesco and Sainsbury's, and this means that Tesco, the supermarket titan, continues to struggle. We've had news this morning that they've sold off their stake in garden centres. Again, this is Dave Lewis just saying this is not a core element of our business. There's no point in us owning these garden centres when the UK supermarket business is going down the toilet very, very quickly. And so it's a concentration. The market has said, fair enough, but what's the good news? And I think we're about to see the moment where we get any good news, if there is. They need to turn around the declining trend in sales. In terms of the price chart, you can see it has had a very choppy year. We had if you cast our minds back to 2014, you can see there we were down at £1.50 a share. That's exactly where we are now, really, and that I think underscores the market scepticism that Tesco is able to turn around its business. And so far, there's little sign that it has been able to change the longer-term trend. So a very important trading statement for Tesco coming up.
OK, well, every little helps, doesn't it? Let's talk about Whitbread then, shall we? Because, OK, this company has Costa Coffee, doesn't it? Premier Inn as well. Very loyal customer base, so this company, but also the minimum wage could potentially hurt this one as well.
Yes, Whitbread's been keen to talk about the minimum wage and how it's impacted its business and how it is also responding to the minimum wage. It was a great performer the last few years. Whitbread shares just continue to rally and rally. Costa Coffee keeps expanding. It's an odd company, because it has Costa Coffee under one roof, Costa Coffee and Premier Inns under one roof. Which aren't related at all. Exactly. In the market, investment banks who love a good fee keep saying, well, why don't you spin off one of them? You know, Costa Coffee's a great business. It could maybe do better by itself. But the moment Whitbread says no, we're happy to get both ends of that spectrum. We get the sort of regular sales from Costa Coffee and we get the growing business from Premier Inns. So it has been an odd time for Whitbread. Nonetheless, the share price has really continued to fall back from when it was worth £54 a share, now worth £39 a share. It's fallen along with the broader market because it was a high growth share. It was doing really well, but since then the growth has faltered, the broader market has faltered, and people are saying, well, really, where's the good news coming from? And I think Whitbread's trading statement next week needs to turn that story around, because it has laboured around £39–40 a share now for about 4 or 5 months without any sign of good news. Even if it does rally, though, even if it does rally, you've got that descending trend line on the chart up towards about £42 a share. So as long as we stay below that, it's still tough times ahead for shareholders. I think we need, like with Tesco, a good news story, and we need it fast.
A bit of momentum is needed. I would normally ask you at this stage what's going to dictate next week, what the theme's going to be, but I think it's pretty obvious, isn't it? EU referendum.
It is all about that next week, and it is the culmination of what we've been waiting for these last few months. As we say, the polls have been very interesting this week, but the betting markets continue to point to a vote for the Remain campaign. But we've had a lot of volatility this week, and volatility in financial markets usually is shorthand for markets go down. Now maybe we'll get something on the upside because we had a big bounce in the US yesterday. It's carried over into London today. Maybe the market's just beginning to recover itself, thinking they'll still vote to stay in. So it'll be very interesting to watch on Monday to Wednesday to see what really happens. And the IG binary, of course, still a good place to get a sense of actually where the broader market is thinking the vote will be.
OK, Chris Beauchamp, thank you very much. We are going to be live on Thursday from 6 a.m. for reaction to that. I should say Friday, actually, because that's when we get the results. So maybe we're going to need a couple of those Costa Coffees here. But thank you very much indeed for watching. Have a great weekend. Goodbye.